Namaskar and good morning. Today we will look at the results for Q4 FY23 of Indusind Bank. The results are reasonably good, not very outstanding I would say, but among the private banks it's definitely very good. The bank is headed by Mr. Sumant Katpalia, Managing Director and CEO of the bank. The bank has got a wholly owned subsidiary, Bharat Financial Inclusion Limited. It has a business correspondent of the bank involved in originating small ticket MFI loans for the bank, and there is also an associate of the bank, Indusind Marketing and Financial Services Private Limited. Now let us take a brief look at the profit and loss account for the fourth quarter ending March 31st, 2023. Net profit was 2043 crores as compared to 1401 crores during the corresponding period of previous year, up by 46% year on year. That's very good among banks. 2043 crores is the net profit in Q4 this year, only 1401 crores last year, Q4. Pre-provision operating profit, PPOP, 3758 crores, registering a growth of 11% over the corresponding quarter of previous year at 3379 crores. Operating profit 3758 crores, now 3379 crores in Q4 last year. PPOP per average advances ratio for the quarter was at 5.60. All these are good parameters. Net interest income is 4,669 crores and it has grown by 17% for the year on year and 4% quarter on quarter. Quarter on quarter also plus only. Year on year is good plus 17%. Net interest margin for Q4 stands at 4.28% against 4.20 in last year Q4 and 4.27% in Q3. See, compared to both the previous quarter and the corresponding quarter, in both current quarter is better. Net interest margin is 4.28. Yield on assets stands at 9.2% against 8.28% in corresponding quarter. Cost of funds stands at 4.92% as against 4.08%. Cost of funds has increased somewhat, but it's okay. 4.92 also is not bad. Net interest margin 4.28%. Quarterly net profit grew by 46% to 2043 crores. Deposits have grown by 15% year on year to 36,120 crores. It has no, actually deposits have grown 15% year on year to 3,36,120 crores. Earlier it was 2,93,349 crores. From 2,93,000 crores to 3,36,000 crores, deposits have grown. Gross NPA and net NPA ratios have improved to 1.98% and 0.59% from 2.27% and 0.64% year on year. So, gross NPA ratios are also very good. In fact, the net NPA ratios are also not at this quality level in many banks. So Indusind Bank is performing well in NPAs. Net NPA is 0.59%, gross NPA is 1.98%. So in NPS, it has performed well. CRAR is 18.42%. Not bad. Very good. So the dividend recommended is 14 rupees per share, or 140%. Last year it was 8 rupees 50 paise. Now it is for 14 rupees. So company has got a very high trailing 12 months EPS growth, high Piotrowski score, high return on equity and EPS growth. Good quarterly growth in the latest results. Return on equity has been improving for the last 2 years. Return on assets has been improving for the last 2 years. Growth in quarterly net profit and increasing net profit margin year on year. Increasing revenue every quarter for the past 4 quarters. See, revenue is increasing, profits are also increasing every quarter for the last 4 quarters. Annual net profits are also improving for the last 2 years. Book value per share has been improving for the last 2 years. Now, what are the flip points, weaknesses? Net cash generation is coming down. Promoters' pledge is rather high. Some opportunities are there. Trailing 12 months price earning ratio is now very low. Price earning ratio is low means there is an opportunity for you to buy. Lower compared to 3 years, 5 years and 10 years price earning also. Brokers have upgraded their recommendations for target price. Decrease in NPA, decrease in provision, all are good. RSI indicates price strength. Face value is 10 rupees. Market cap is 87,036 crores. Sector price earning is 24.93. Book value is 615. Now, how are the analysts rating Indusind Bank? 73% of the analysts examined have given a buy call. 15% have stated outperform. 13% have stated hold. Nobody has said that it is an underperformer or sell recommendation. Shareholding pattern, if we see, already we have seen promoters' pledge is high, 45.48%. Promoters have decreased their holding from 16.51 marginally to 16.50. Mutual funds have increased their holding from 14.42 to 15.63%. FIs have decreased their holding from 44.79% to 42.16%. Institutional investors have also decreased their holding from 69.86 to 69.19%. So, it's a mixed bag. Some people have increased their holding, some people have decreased their holding. Overall, bank is a good bank and it is likely to perform well in future also. Other income stands at 2,154 crores against 1,903 crores last year Q4. So it has improved by 13%. Core fee has grown by 27% to 2,087 crores against 1,644 crores. Operating expenses also have grown, which is a negative point, but okay. See, when the whole scenario is increasing, operating expenses will increase. When income is increasing, operating expense also is bound to increase. It has increased to 3,066 crores against 2,509 crores last year. Q4 increased by 22%. Net interest income 17,592 crores for the whole year. Now we are looking at the whole year. Profit and loss account for the year. So 17,592 crores net interest income. It has grown up by 17% from 15,001 crores. Fee income is at 8,173 crores. Compared to previous year 7,345 crores. For the year ended, the bank earned total income 44,541 crores compared to 38,167 crores last year. So annual jump in total income also is very good. Operating expenses also naturally grows from 9,300 crores to 11,300 crores. It has grown. Pre-provision operating profit of course has grown from 13,000 crores to 14,000 crores. Net profit is 7,443 crores for the whole year compared to 4,805 crores last year, a jump of 55%. Now if you look at the balance sheet footage has increased to 4,57,837 crores against 4,01,967 crores last year, a jump of 14%. Deposits are at 3,36,120 crores against last year's 2,93,349 crores, a jump of 15%. CASA deposits increased to 1,34,728 crores. Of that, current deposit accounts are 50,600 crores and savings bank deposits are 84,000 crores. So CASA deposits are very good at 40% of the total deposits. Advances 2,89,924 crores as against 2,39,000 crores, an increase of 21%. The loan book quality remains stable. Gross NPAs have come down, net NPAs have come down. Net NPAs are just 0.59% of the net advances. So it is coming down. Provision coverage ratio is very good at 71%. Provisions and contingencies are at 4,487 crores compared to 6,602 crores last year, corresponding quarter of last year. So the provisions and contingencies are also very good. It has come down. Total loan related provisions as on March 31st are 7,324 crores or 2.5% of the loan book. Capital adequacy ratio is 17.86%, slightly down, but 17.86% also is very good. Network, if you look at that, bank's distribution network is 2,606 branches are banking outlets and 2,878 on-site and off-site ATMs. So bank is growing. Compared to last year, there is a significant growth. Client base is 34 million. So Sumant Katparia is very satisfied about the affairs of the company. Profitability metrics have shown uptrend in net interest margin, return on assets and return on equity, everywhere. Net profit has crossed 2,000 crores for the first time. Gross NPA, net NPA are both down. So overall the bank has performed very well. The bank has embarked on the next 3 years journey with new targets, new achievements planned, etc. So Indusind Bank is a very good private bank, performing very well in most of the metrics. So but listen 2-3 times and then take your decisions. But it's a good bank, no doubt about that. It's not going to disappoint us in the long term. Long term investors have no reason to be afraid of the Indusind Bank. Now kindly keep subscribing to this channel and ask your friends also to subscribe to this channel. I will give you some of the very best companies with their detailed performances like this, so that you can take decisions on your investment. Always remember about the portfolio approach. Never put all your eggs in the same basket. So minimum 10 company shares, maximum 15 company shares is good for normal investors. Not big investors, they can have their own this thing. But we can have 10 to 15 company shares in our portfolio. Thank you for listening. I will be back with you with another very good company.